Alright, everyone's looking for that next stock that's gonna pop, but let's be real. The legendary Warren Buffett always said the best way to get rich long term is to buy wonderful companies at a fair price. And right now, the market is serving up some incredible opportunities on a silver platter. So before the year is out, I'm putting my money where my mouth is. I'm buying three specific companies. Two are household names you definitely know, and one is an absolute monster of an AI play. I believe these are key to building serious long-term wealth. Let me show you what they are and why. Now, this isn't about chasing hype or gambling on some high-risk bet. This is about finding top-quality businesses that are trading for less than they're actually worth, a classic Buffett move. We're looking for companies with a strong competitive advantage, what Buffett calls an economic moat, run by smart people and selling at a price that just makes sense. In a shaky market like this, being patient is your superpower. As Buffett has shown us over and over, the stock market is basically a machine that moves money from impatient people to patient people. If we focus on the real business and ignore the day-to-day noise, we set ourselves up to win. So let's get into the first amazing company I think is trading at a fantastic price. But first, a quick and important heads up. I am not a financial advisor. This is all for educational and entertainment purposes. You've got to do your own research and talk to a professional before making any investment moves. Okay, let's do this. First up on my buy list is a name you see on pretty much every corner, Starbucks. And I know what you might be thinking. Starbucks has had a rough go of it lately. The stock's been lagging, and recent earnings reports have shown some struggles. Their Q3 results for 2025 revealed a dip in global sales and a drop in profits from the year before. Margins in North America also took a hit, partly because they're spending big on a turnaround plan. So why in the world would I be buying it now? Because this is a textbook example of what Warren Buffett means when he says, the best chance to deploy capital is when things are going down. He hunts for great companies that have temporarily fallen out of favor, and that's exactly the opportunity I see with Starbucks. Here's my thinking. Starbucks has a powerhouse brand, massive global reach, and a digital machine that gives it a lasting edge. The market is so focused on the short-term hiccups that it's completely undervaluing this long-term strength. Let's talk about that competitive moat. First, the brand. Starbucks doesn't just sell coffee, it sells an experience. It's that third place between home and work. That kind of loyalty is incredibly tough for anyone else to copy. Second is digital flywheel. The Starbucks rewards program and mobile app is a beast. It keeps customers coming back, gets them to spend more, and gives Starbucks a goldmine of data to personalize deals and keep the stores busy. And while the recent numbers look soft, the company's back to Starbucks plan is showing real promise behind the scenes. In the Q3 2025 earnings information, leadership noted that customer satisfaction is up, employee engagement is rising, and staff turnover is getting better. These are the nuts and bolts of the business, and getting them right is everything for a comeback. As CEO Laxman Narasimhan has said about their strategy, we're not just getting back to Starbucks, we are building a better Starbucks. So then you have the international growth story, especially in China. Competition there is fierce, but China's sales actually turned positive last quarter, and the international revenue crossed $2 billion for the first time ever. The company is still opening hundreds of new stores abroad because it knows that's a huge engine for future growth. Today's stock price is stuck on the recent problems, but I don't think it's factoring in the comeback potential. Analyst price targets are all over the map, but many see a lot of room to grow from here, with some targets hitting as high as $115. Plus, the company pays you a dividend just to be patient while the turnaround gains steam. Buying Starbucks today is a bet that these headwinds are temporary. For a long-term investor, this is a chance to own a piece of a global icon at what I believe is a more than fair price. Next up is my second pick, a company that is the undisputed champion of its field, Adobe. If Starbucks is a play on brand power, Adobe is like a technology toll road that is absolutely essential for anyone in the creative and digital world. My case for Adobe is straightforward. Its software is so baked into professional workflows, and its subscription model is so strong that it's basically a required utility for creators and businesses. And now it has a massive new growth engine, AI. Think about it. Photoshop, Illustrator, Premiere Pro. These aren't just tools, they are the industry standard. For creative pros, knowing how to use Adobe's Creative Cloud is practically a job requirement. This creates an incredibly sticky ecosystem. The more people that use Adobe software, the more essential it becomes for everyone. You can see this dominance in its financial reports. Adobe consistently delivers strong revenue growth and mind-blowing gross profit margins, often floating around 88 to 89%. For its second quarter of fiscal 2025, the company posted a record revenue of $5.87 billion, up 11% from the year before, and it even raised its forecast for the rest of the year. Its core business, the digital media segment, just keeps growing by double digits. This is a company that has perfected the art of predictable, high-margin, recurring revenue, exactly the kind of business Buffett adores. Now, some critics might worry about new competitors or a slowdown in its recurring revenue growth. But that's where Adobe's next chapter begins. Artificial intelligence. The company has been weaving its AI, called Firefly, into every single one of its products. This isn't just a cool feature. It's a massive productivity booster that makes its moat even wider. From creating images in Photoshop to summarizing documents in Acrobat, AI makes Adobe's tools stickier and harder to quit. The company is already seeing billions in revenue influenced by AI, and subscriptions for its Firefly tools are taking off. Adobe is also pushing into big business with its Experience Cloud, which handles analytics, advertising, and e-commerce. This is another smart move that diversifies its income and locks it even deeper into how major companies operate. For a long-term investor, Adobe is a rare mix of market domination, incredible profits, and a clear runway for growth with AI. The stock isn't cheap in the traditional sense, but remember, Buffett's rule is about buying wonderful companies at a fair price. Given Adobe's fortress-like position and its vital role in our digital world, I believe today's price is a fair entry point for a business of this quality. For my final pick, we're shifting gears from the established giants to the absolute engine of the AI revolution, NVIDIA. This is my explosive AI play, but it's backed by incredibly powerful fundamentals. I think even a sharp value investor like Buffett would be impressed if he were diving into tech today. My thesis for NVIDIA is that it's not just a chip company. It is building the entire foundation for the next era of computing. Its stranglehold on the market and its powerful software ecosystem create a moat that will let it capture a huge piece of a multi-trillion-dollar opportunity. Let's be blunt. NVIDIA's GPUs are the picks and shovels in the AI gold rush. Every single major tech company, Microsoft, Google, Meta, you name it, is spending billions on AI data centers, and they are almost all running on NVIDIA's chips. This has led to some truly jaw-dropping numbers. In its fiscal second quarter of 2026, NVIDIA reported revenue of $46.7 billion, a 56% explosion from the previous year. Its data center business, the heart of its AI operation, also jumped 56% to $41.1 billion. These aren't just growth numbers, this is a complete rewiring of the tech industry happening in real time. But here's what makes NVIDIA feel like a Buffett-style investment, even with its insane growth: the moat. The company's power isn't just in the hardware, it's in its CUDA software platform. CUDA is the programming language that lets developers tap into the power of NVIDIA's GPUs for AI. For over a decade, a whole world of developers, researchers, and apps has been built on CUDA, creating massive switching costs. A competitor can't just make a faster chip, they'd have to convince the entire industry to abandon the platform they all know and use. That software ecosystem is a classic unbeatable moat. CEO Jensen Huang predicts that companies could spend $3 to $4 trillion on AI infrastructure by the end of the decade. If NVIDIA captures even a slice of that, its current valuation is going to look like a steal down the road. Analysts are already forecasting enormous growth, with some seeing its data center revenue hitting $500 billion a year by 2028. Of course, with huge growth comes higher risk and a hefty price tag. The stock trades at a high P/E ratio, and there are risks like new competition or its reliance on a few giant customers. This is not a stock for the faint of heart. But Buffett also taught us to be greedy when others are fearful. While nobody is fearful of Nvidia right now, the chance to own a company this central to a technological sea change is incredibly rare. For an investor with a long time horizon, I see Nvidia as a calculated bet on the future of technology, led by a visionary team with a nearly untouchable competitive advantage. So there you have it, 3 companies I'm adding to my portfolio before the end of the year. We have Starbucks, a world-class brand that's temporarily on sale. It's a classic value play on a fantastic company working through problems that I believe are completely solvable. Next, we have Adobe, the tech toll road with an unbreakable moat around the creative world, which is now hitting the accelerator with AI. And finally, Nvidia, the company literally building the AI revolution. It's a high growth beast with a surprisingly deep competitive moat that makes it a strategic long-term hold. Each stock has a different story, but they all share the same core idea: buying high quality businesses with strong durable advantages, whether it's the brand power of Starbucks, the ecosystem lock-in of Adobe, or the tech dominance of Nvidia. The goal is always the same: own a piece of a great business and let it do the hard work of compounding your wealth over time. That's my game plan, but I want to hear yours. What stocks are you buying as we head into the end of the year? Drop them in the comments below. I read every single one. And hey, if you got some value out of this breakdown and want more deep dives into the stocks and strategies I'm using to build wealth, make sure you hit that subscribe button and turn on notifications. You won't want to miss what's next. Thanks for watching, and I'll see you in the next one.